This week has been crazy. Just crazy. Hey guys, we're back at week 9, week 10. I forgot which one it is, but you're gonna see it in the thumbnail and you're gonna see it from the title of the video. But I just want to say this week has been crazy. The market has been tanking and crashing. We see the S&P 500 dropped 20% in 1 month. In 1 month time, from around 10th of February to today, it dropped 20%. Bitcoin crashed from $8,000 up to the low, down to the lowest $3,000, and we're just looking at huge amounts of fear in the current market. You know, everyone is talking about the coronavirus. Everyone is associating coronavirus to the next global pandemic that's going to kill everybody, and all the sectors in the stock market, in the currency market, in whatever field is just dropping and tanking. And so it was so tough to trade this week. It was really difficult because governments have been reducing interest rates down to really low levels. Canadian dollar, literally the Canadian Feds lowered interest rates from 1.25% to 0.75%, and it's just, we're looking at a time in history that is caused by something that has really never happened to the United States. Such a global pandemic, coronavirus. No one knows what's going to go on, but as traders, what we do is we manage risk. We maximize profit. And I would say that this week was so tough that instead of losing 20% of the market, I lost a substantial amount, but not too much that could cause a huge hindrance to my assets under management. Listen, guys, always be a trader in scenarios like these, and during high volatility, I would advise that none of you guys put money into the market, because it's right now a time where everything is just uncertain. We have to understand that we don't have to trade every single day. Understand that there are periods of times where it's better to have money, have cash in your account, like what Warren Buffett is right now. He has a lot of cash in his account because he foresaw an event like this. My analysis is that the coronavirus will have an effect on every single sector in the market. However, if this effect is prolonged for a period of time, and if everyone is fearing, having a lot of fear, which is the current situation right now, we're going to see bad quarterly earning reports from every company in the United States and every company in the world. And what's going to happen? Naturally, with poor earnings and business earnings, the market will continue to tank downwards. And I consider this ripple effect by coronavirus already established. We got to understand that we are looking at a bear market in the coming 2 to 3 months. And so we have to be prepared, and we have to learn how to manage our risk and manage our position during these times. So before we get into the video, I just want to let everyone know that we are in a situation that has never been seen before up until 2008. We'll go a little bit of analysis on what is happening in the market, and finally we're going to talk about my weekly trading recaps. So without further ado, let's get started. All right, hey everybody. So we're looking at the S&P 500, which is the 500 index for the 500 largest market cap companies in the US. I mean, which includes Apple, Amazon, Facebook, and all these companies. If you can see from here, like starting from February the 10th, the whole market just tanked from around 3,400 points all the way to 2,700 points. And so we're looking at huge amounts of downward momentum. If we look at the 5-year chart, you see that originally prices were within this range, and it just dropped. It just completely tanked. Some people wanted to short and they didn't short this level, but I would not recommend anyone to short right now because we are at this really strong consolidation area. A lot of buyers have placed orders right here, and since prices got down, they wasted around 2 years of time, 2 years of gains. A lot of buyers would be considering getting out of their positions, and then prices would go down if that's the case. But here is a place where I would not recommend you guys to get out. Instead, I would recommend dollar cost averaging. If you guys are playing the stock market, start buying into the stock slowly. Slowly buying in, because generally um, there'll be a strong rebound from the consolidation level right here. And I just want to show you guys another important thing, which is the VIX. So what is the VIX? Well, the VIX is a volatility index, which actually is a direct measurement of the amount of fear in the market. So the higher the amount of fear, the higher the amount of index, the higher the VIX level. If you look at all the previous, um, generally the VIX moves opposite to the stock market. So when the stock market is tanking, the VIX, you see it will go up because it's a direct measurement of fear. If as fear increases in the market, the VIX goes up. As fear decreases, it goes down. So when it's at this level right here, it is there's generally not a lot of fear in the market. Everyone's confident that the market will continue to go up. This goes to show that the market is in a huge amounts of fear. Okay, so let's take a look at whether the VIX and compare the VIX to the 2008 financial crisis. Right here we hit a high of around 7, let's see, high right here, 77.6. That's the highest amount that was hit this week. And by the by the coronavirus incident. If we look back at a huge data pool, starting from 1991, this was tracked, and we can see that in reality, given that this is 77.8, the 2008 financial crisis was 76.3. The amount of fear in the market was much higher than that right now. And let's just look at 5 years. Okay, we can see that in just 2 weeks time, in just 2 weeks time, prices moved from around $13 points to around 51. No, not this one. Right here, right, from around 19. 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, 7 weeks, 8 weeks, all the way to 95. And so we are looking at a very similar pattern, with this one. We have 3 consecutive weeks of high amounts of fear in the market, and if it continues to persist, we might be able to test the highs of 2008. And so I believe that if it crosses 80, there will be a lot of fear in the market. And so we have to be wary now, because based on history, this would be the second, third, or fourth. I think it would be the third most volatile market periods in history. So it's good to always keep cash on hand. I'm trying to load this statistic right here, but it wouldn't really open. Oh, perfect. You see, here's a statistic of the coronavirus incident. We have around 80,000 people infected, confirmed cases around 1,600,000, but deaths are only at 3.7%. Right? I mean, based on the trajectory, when it was discovered in China, the amount of confirmed cases, right? The amount of confirmed cases rose exponentially until it plateaued in the middle area. It plateaued right here, And then when the world caught on, now it's going up exponentially. So we are forecasting that in the near future there will be an exponential rise in the amount of confirmed cases, and this would negatively affect the stock market. So we just have to be able to understand what's truly going on. And based on my perception, it's a hype. Why? Because the death rates are so low, 3.7%. I mean, only 6,000 people died so far in a period of 6 months, but the flu has killed more and more people, right? Recovery rates are at almost 50%. So understand that the whole thing is driven by hype. The whole thing is driven by lots of fear. It's this group psychology of fear just pushing the markets downwards. So understanding that will give you an edge, a psychological edge over the market. Instead of acting fearful, we have to take opportunities at this time. Okay, let's get into the weekly trading recap. Whew, all right. Okay, so I took 5 trades this week, and if you wanna really see how much I lost $512 in total. In total, I would say that this week has been a tough week. I lost $312. Which is not bad. That's only 5% of my account so far. That's only 5% of my account. No, less than 5%. 3-4% of my account. I know people who have lost 43% in their portfolio. And so while we're managing risk, we believe that, over time we're gonna catch back, and so it's fine. Trading is really a mental and risk management game. So let's begin. Australian dollar long at 0.66021. So Aussie dollar is the okay. So we have this blue line right here. We have this blue line right here. Took a long position on the 9th, right? So what really happened? You see, there was this level right here. Prices went up, consolidated, and then further aggressive buying happened. And so I drew a volume profile over here and discovered that this level was a strong level that could have been traded. This is because I believe that institutions were getting into the market right here and then later pushing the prices up. So when prices come back to this level and make a test, it's going to rebound. But unfortunately, the setup did not, present to itself, and I took a loss from this trade because it gone down by more than 10%, 10 pips, which is my original take profit level, stop loss level. So this was a losing trade, and because of that, I lost $221. So next one, US dollar, Japanese yen. US dollar, Japanese yen has been facing a huge amount of volatility. I just wanted to take a look at that. In just less than one day, all right, it rose from 104 to 108. We're talking about 400 pips of movement. That's scary. It's very, very scary, in just one day. And so it's extremely volatile, and it was extremely difficult for us to trade this as well. So let's take a look at this opportunity on the line right here. Perfect. Okay, so at this level, I was looking to get in for a short position. However, once I got into a short position right here, that was the first level, it bounced all the way up and I lost $204. But this wasn't the main thing. If you could see let me adjust the let me adjust the time frame so you guys can see more of that. Right side margin 8. Print show intervals. I don't know how. Anyways, I took a loss on the first one, but I got in again once it rose by around 4 pips. I got in again. Why did I get in again? This is what I got into. So I took another trade, another short position because I got stopped out, right? I got stopped out. I thought that prices would go back down. So I took another short position right here and realized that if I don't get out, it would kill me again. And so I got out quite early for another small loss. But this was an impulsive play. This was very, very impulsive. And it was because I didn't want, I lost already $400. I didn't want to lose any more. And so I tried to gamble, but I realized that it was a mistake. So I decided not to pursue it, just cut my losses earlier. So that already itself was a $500 loss. Let's look at another trade, Euro US dollar. Euro US dollar. I was supposed to do a long from 1.13132 right at this level. All right, I was planning to go for a long setup. Why? Well, because of this. You see this volume cluster right here? Later, with a gap open, prices went up. I thought that there was a huge amount of buying right here that causes the prices to go up. If we draw the volume profile region, we can see that there's huge amounts of volume right at this level. So this makes me believe that there are large amounts of institutional buying right here, and then when prices come back down, it would go and test it. However, if we can look right here, this is a pin bar, right? This is a pin bar. So generally tested levels for me is if prices move within the level by around 3 pips and bounce up by 8 pips. And at the same time, it forms either a pin bar, which is one like this in this case, or it forms a confirmation candle where there's a candle body over another candle body towards the upside, then I will not trade this level. So if we see 16, 13, that's around 3 pips, right? I assume it's 3 pips. And did it move in the opposite direction by 8 pips? 17, all the way to 37. That's 20 pips. Yes. So 8 pips. That quantitative amount is fulfilled. Now, the next question. Is it a pin bar and a confirmation candle? Yes, it's a pin bar. It's one of them. And because it fulfills these two criterias, which is the pip amount movement, pip movement, as well as candle shape, we have to and we should have bailed out from this, but I still decided to take this trade to a gamble until I realized that as prices were coming down on this 30-minute chart, that it would be stopped out, and so I decided to just cut my losses as soon as possible. And so this left a loss of $3. You know, when you are in the a 4-trade losing streak, it's quite discouraging. But oftentimes as traders, the hardest thing is not so much about trading the setup. The hardest thing is managing your psychology. And so a good trade presented to me on the 12th of March on the Swiss franc. So let's take a look. Okay, so we have to scroll back to the original chart, which was right here. At this level, right? We can see that prices are coming down, consolidated sideways, and there was a strong aggressive sell-off. From this level, we determined that there would be a strong selling activity right here. And we believe that as prices come down, these institutions with their sell orders, when these prices come back up and touch this level, it's going to trigger a downward selling momentum. And so this level was predicted on the 6th of March, and for around 1 week time, after 1 week, it got back to this level. Now, the thing was that once it touches this level, you see that in the general 30-minute price action, there are more greens, right? But however, once it hit this level at around 58, I did not get in at 58. Instead, I got in at 0917. 05917, 05917. Are we even talking about the same level? Let me see. Excuse me. Yeah, no. 0.9517 should have been this level, right? Excuse me, guys. Okay, I'm sorry. It should have been this level right here. It's a mistake I made. Yeah, it should have been this level, not the other level. So if we go back and look at the price action, we see that again right here there's a strong consolidation area followed by a downward aggressive sell-off for about 40-50 pips. So from this area we drew a volume cluster and we determined that this level 0.9517 is a strong level where there's a lot of institutions selling. And you see, we determined this level on the 5th of March. Took us around 7 days, which is around a week's time, before prices came back to this level. Now, you see, on the 30-minute chart, it would have been a loss, right? However, our take profits and stop loss is just 10 pips. So if we look at the 15-minute chart, once prices hit this level, it made a downward bounce. You see this downward wick right here? Yep, it made a downward bounce from 17 all the way down to 0.9500. That's 17 pips. Right? We shorted this level with a 10 pip take profit. We got out before the prices went all the way back up and we secured a $200 profit. So this is pretty much the whole recap. I don't expect people to, watch this and listen to this because this is actually for myself. This is to keep myself accountable to the journey. In the future, I'll be my dream is to be an entrepreneur, to do things lots of people wouldn't do, and to create value to the world. I'm just 20 years old. Doing this trading is to build the amount of money I have in order to pursue those goals that I want to. Maybe start a hedge fund. I don't know, but this is good because I'm keeping this in the record, and in the future, we're gonna do big things. I know that. So without further ado, this will be end of the trading recap. I hope you guys enjoyed it. Let me know what you guys think. Please subscribe, like this video, click on the notification bell so you get updates whenever I release a video. It would mean a lot to me if you guys could do that. And last but not least, I hope you guys could also understand that we're living in a current state of affair which is pretty serious. A lot of people are afraid of the coronavirus, and a lot of people it's just that the world is in panic right now. When the world is in panic, understand that you must keep calm. All right, don't do anything stupid, don't fall into it. Have a rational mind, trade rationally, and understand that there would be the risks levels would be a lot higher. So I hope you guys enjoyed this video. I'm gonna leave right now, so peace out.